banking and then worked at Intel. And her primary objective is how she can be of service to her clients. It's about the clients all the time and never about her. She's passionate about helping people buy their first or last home and helping elders utilize their home to maximize retirement in their senior years. So Paula, please take it away.
Take it away. Where am I taking it? Okay, so hi everybody. Paula Harvey with Wonderful Loans. I am so excited to be so brand new into the broker world again. I haven't been in the broker world since about 2008. I've been in retail mortgage banking ever since. And I am just super excited to be out of the corporate straps that tell me what I can do for my clients, because it's very limiting for so many reasons. So what I wanted to talk about today, because there's so many differences in whether you need to or not understand the differences in what you're getting out there when you go talk to a loan officer. So we have several different areas. For example, we have retail lenders. Retail lenders are typically big banks. They're not a mortgage bank. They're a retail lender. They offer mortgage also as a service. And they also offer a lot of other products. Big ones, Wells Fargo, Bank of America, etc. They're typically, because they offer a lot of products, this is their mortgage product. They offer less product typically because it's focused on so many other things as well. So a lot of times they're lending their own money, and that's enough about that. I'm trying not to make this too complicated. Retail mortgage banker. So a retail mortgage banker is like what I've been doing for many, many years. It's a bank, but they only focus on mortgage. They do have a lot more product to offer, but that's all they focus on. They don't lend their own money though. They borrow funds at short-term rates from warehouse lenders to cover mortgages they issue, and then they turn around and sell them after the fact, and that's how they make their money. They're usually sold through Fannie Mae and Freddie Mac if that's any interest. You can typically broker with them, so if you're at one of those, say I could broker to another lender if they would allow it, but they would never allow you to broker for price. So I can't shop for a better rate because I need to keep that in-house. And if they don't allow you to go to a certain lender to broker it out, then you're stuck. And it's very restrictive, several layers of management in that all are receiving bonuses, etc., and eating away at the money that otherwise could be passed on to the consumer. Direct lenders, they typically originate their own loans, and they also borrow money. I'm going to kind of go through some of these. Some of these are more important, I think, and there's even a lot more than what I put on this list last night. Then there's portfolio lenders. They're loaning their own money too. They're typically retaining it on their books as their portfolio, because you also have servicers. So when you get a loan, however you get it, you get the loan, and there's a person who owns an investor, a portfolio lender that owns the note, and then they can sell the servicing of that loan, and that means who you're paying your mortgage to, or they can retain it. Typically, portfolio lenders are going to retain some, or usually not all. Okay, they're going to sell some. Hard money lenders. There are some that clients can go directly to. Hard money lender is somebody, it's completely out of Fannie Mae, Freddie Mac guidelines. If you're in a very difficult situation, say, I don't know, you had a foreclosure or bankruptcy or whatever, you could get a loan right away, but you're probably going to have to put 30% down. So I've used them when absolutely necessary to save a client from foreclosure, for example, and put them in there for just a little while so that they could then, after a couple of years, refinance out of it. So going into the wholesale world, there's two parts of it. I don't work with retail anymore, right? Some retail banks, they also can wholesale. I'm out of that now. I'm working directly with wholesale lenders, hard money lenders, whoever I need to find a loan for a client. So a wholesale lender is lending their money. They do sometimes have retail doors. For example, Wells Fargo, Bank of America, some of the big ones. They have a wholesale division and they have a retail division. So a retail client can go into their bank and get a loan. But they're going to offer, on the wholesale side, they're going to offer lower rates that then a mortgage broker can go and get that product for their client. So the wholesale lender is the money. They're the money. The broker is me. I'm the one who now can go find anyone. I don't actually make the loan. I just find it. I broker it. I have multiple lenders that I can look for the best rate and program and price for the client and product, because there's so many different needs. And it's a really interesting time right now. I've noticed, and a lot of other loan officers as well, there's a lot of different needs that are just coming out. Not one loan is the same. They're all different. So you really have to listen to the client's needs, their situation, and be able to structure the best deal around that for them. So when we're working with, so for example, United Wholesale Mortgage is one of the big lenders that we go to for a really good loan. They're one of the best, they have one of the best interest rates. One of the reasons, very importantly, that I decided to go and hang my license with the broker that I'm with now is because they are so large. The way that United Wholesale works, for example, they have several different rate sheets. The number one rate sheet, the top rate sheet, is one with the best pricing, and you earn that by volume being brought into that company from the broker. My broker is on the top. We have the best volume that goes to them. So we get the best rate sheet. So why would I be a broker myself? I wouldn't get the best rates for my clients because that would just be me, right? And the way that they treat us, and they are amazing, the service that they offer. So we're their sales force. So like when I was in retail mortgage lending, I was the sales force. All the loan officers are the sales force, but there's still all the middlemen. With wholesale, they don't want to get in retail. They're not interested. A lot of these that are only wholesale lenders. And so they do everything to cater to our clients and get a really good loan done because they want us back. They want our business, and so they are doing amazing work. I've been there now for 2.5 weeks. Last week, I already closed 2 loans.
Nice.
Yeah, both of them purchases, one in Arizona, one here. And we have docs and title on Monday, but we couldn't close until Friday. It took us a week to get docs and title. It is not that way in retail because they're just pump it through. Let's get the documents we need. Let's do what we need to do. Let's not, we got to add a letter of explanation why you pulled your credit. Here, for this loan. I'm not kidding. It's the gamut. I've had clients that have had to write 10 letters of explanation for things. And so it's just easier. I love it. My clients love it. I got a call. Well, I called my client last week, and right on the day we had to close, Wednesday, hey, guess what? We funded your loan. Congratulations. He's so excited. He goes, man, there were so many issues going on through this whole process. He goes, your process was so smooth. It was so clean. It's the best experience I've ever had. He goes, please send me a link so I can give you a review. Yes, me.
That's fantastic.
So,
Awesome.
Yeah.
Are you now doing kind of in the other location, or are you at
I'm in Granite Bay.
In Granite Bay. Awesome.
Yep, I love it. And I also, what I love is that I feel home. I'm back in an office full of other loan officers, many of which I worked with before my last year of wherever I was. I was with all these guys that I worked with at Finance of America for 9 years. And they're all there, and many other people are there. Lots of Finance of America people that were from different offices. And it's like, hey, I have this weird deal, have you heard of anybody who does this? Or hey, what about that? And everybody comes to the office and it's buzzing and awesome, and we're just totally supportive of each other.
That's great.
It's a really great environment, and I just feel really blessed. I feel like I came home.
That's fantastic.
I have a question.
Yes.
So, it's been 32 years since I worked for a wholesale lender. So, let me see if I can get this right my first job. So, so our company is what we did is we would have a broker like you would come in, all the parts and pieces would be there, and I give it to an underwriter. They underwrite it, conditions, whatever, and then we have a funder, and then I used to draw the docs, send it to the title company, and then once that loan closed, we would write out a commission check to the broker. Basically, is that still kind of the same thing?
Yeah, and we even have so much control, like United Wholesale, for example. We would have to wait at the end to draw docs like, okay, now we're clear to close, all the conditions have been met, we have to order docs, it could take a couple of days. We don't know when the docs are going out. I got people going, title companies, clients, it's like, we gotta close, when are the docs coming out? We gotta figure out when we're gonna sign, we got moving trucks, like all this stuff, right? Not here. Well, United Wholesale too, and we will broker to them every time, if we can, because their rates are better, their process is better, everything's better. They relinquish responsibility to us and give us the authority to actually draw the loan documents. And so at the end, once we have our clear to close, order the loan docs, we order them, my processor and there's a team of them. They just they hit the button, basically, docs are out in like 20 minutes. So it's
Yeah, it's a little different 32 years ago.
yeah, but yes, in essence, there's some similarities to that.
And our marketing people would go out and find brokers like you, come to us. We used to be Beverly Hills Securities, and it changed over to Cal Fed. It got bought out a few times, but I know after I had my first child, I didn't go back. But yeah.
Okay, thank you for the questions. So it's a lot. I know that was a lot of information. Does anybody have any questions? Christina?
What is this weird thing I've heard of twice this last week? That there was a decision made that people with good credit are gonna now pay.
Oh, yeah.
What is this?
$40.
Is this
just for government-backed loans, not like.
It's all over the place, but let me just say, first of all, it's been around for a while, it hasn't just come out. The media just decided when they were gonna tell everybody about it.
Okay.
I've talked about it, I think one of my last presentations, I talked about the LLPAs, which are loan level pricing adjustments. And they change all the time. It just depends on the market, the risk of the market, what the investors are after. I know sometimes we make little snide comments about, are they looking to make more money on these? There's nothing we can do about it if you're in, like when they decided that too many people were saying that they were buying a second home and really it was going to be an investment property. And so they made the pricing adjustments the same on second homes as they are on investment properties.
Okay.
So.
That hurt.
Yeah.
Wow.
But I mean, all of those have all been in place, but I'm getting what? I worked so hard. Where is this for me? Trying to get my credit up. No, it's all there. But the good news is, and here's a really interesting thing a lot of people don't know about that. If you're a first-time buyer, regardless of you using a down payment assistance program, a lot of those LLPAs get waived for you, so we can still get you a better rate.
What if you've been a homeowner what if you had a home a long time ago? Is there a status in that number of years where you become another first-time
I've
buyer?
heard that.
After 3 years.
Oh, really?
That's
it?
Yeah.
That's crazy.
Yeah, so it's kind of a nice little thing. Anybody else? Okay, well, if you have any questions or, know anyone who does, I always say, because people say this, well, I have a friend that, they think they want to buy in a year, so they're gonna wait and talk to me in a year. I go, no, don't wait. Let's talk now.
Next time.
You can still buy in a year, but let's talk now, because let's see if there's any, are you ready? Do you know what you need to do to get ready? Is your credit ready? Are there gonna be any opportunities that we can find now that it might take you 6 months to put yourself into a better ready position? So don't wait, and even if you just have questions, let's go through the questions. There's nothing, it doesn't cost anything to talk to me, and so I highly recommend, talking first and not waiting until you're ready, or you think you're ready.
Awesome.
So,
Did you order your cards yet?
yeah, any day, I'm
Good,
waiting for it to
exciting.
land at my front door, so.
Nice.
Okay, well, thank you everybody for listening.